Join over 5,000 attendees for the largest AI event in Asia, Super AI in Singapore, June 5th and 6th, 2024. Edward Snowden, Benedict Evans, Balaji Srinivasan, and over 150 others will hit the stage, joining the industry's most influential to explore and unveil the next wave of transformative AI technologies. Singapore will become a vibrant AI hub for a full week from June 3rd to the 9th, with over 150 side events that will make for unparalleled networking opportunities. Visit superai.com for 20% off tickets with the code REALVISION. Look for the link in the description. What's in store for 2024? Hi, everyone. Welcome to the Real Vision Daily Briefing. With me today is Tommy Thornton, founder of Hedge Fund Telemetry. Hey there, Tommy.
Hey, Maggie, how are you?
Doing okay. How are you?
Good. Just trying to, get to the end of the year. It's been quite a year. I will say from my own personal view, it's been very humbling. It's not easy as a long-short manager to navigate this, especially when you really just haven't embraced the Magnificent Seven. So it's been humbling, I will say that.
Yeah. For a lot of people, Tommy, I mean, I've so many, Brian and I have lost count of the amount of people who've come on here and just say it is one of the hardest macro environments, one of the hardest trading environments they've seen. And I want to touch on that a little bit more as we kind of head into the new year, because I feel like those kind of reflections are important as everybody kind of resets. But let's touch base first on what happened today. Stocks finally hit an air pocket. The S&P and NASDAQ down over 1%. In fact, it looks like we were, selling into the close. So 1.5 for NASDAQ down percent-wise. Same with S&P, Dow down 1.7. It's funny, Russell down 1.3, like had outsized gains on the way up, but kind of keeping pace. Even the VIX is moving, which has been dead in the water,
I
up
know.
9%, but still at 13. I just guess this was bound to happen, right?
Yeah, I think so. And, from the backdrop of what I've been seeing in the last few weeks developing, we've had market sentiment go back up to extreme levels. And I'll just go back to October. We were at market sentiment levels that were pretty depressed. I was expecting and hoping for some sort of capitulation type downside push. And I think I was on Real Vision around then. And I did not capture the full upside move. Actually, I was caught short on a lot of things. It happens, not the end of the world here. But I think now we have market sentiment at extreme high levels with the data that I look at. We have almost every technical indicator extreme on the upside. You look at every RSI on the markets, stocks, sectors, you name it. It's been very, very extended. And I also look at DeMark indicators, and we've had a lot of exhaustion signals. And we had really good exhaustion signals on the S&P only one time this year, and that was I think that was July, and we saw the market come back, fall off a bit, and then we had a buy signal that wasn't the full signal that I wanted, but it was a buy signal in late October. And now we have, and I didn't expect it, across the board, sell signals on almost every index in the market. The S&P is on day 12 of 13, so we're close. And when I see that many signals occurring at the same time, it gives me a lot more confidence that we will see a pullback. And I'm not sure what the pullback will be. If it's something that like we saw back in the end of 2021, we had very similar setup with all the sell signals with DeMark. We didn't just have daily timeframe sell signals. We had weekly timeframe sell signals, which we have again on the NASDAQ 100, and the S&P is very, very close. We could have that next week. So we could have something that's rather interesting going into 2024. One thing also that we just were mentioning, we had three really big earnings reports in the last week. We had Oracle, Adobe, and last night we had FedEx. and those stocks got murdered
Yeah,
after
FedEx was
hours.
smoked today, right?
Yeah, and I got one right. I was short this into the number and covered it. I take the gains when you can, but I got lucky with that one, and I think it's sort of indicative that we're perhaps bubbled up and the bar is very high for earnings going into Q4 earnings that will be starting in a few weeks. So I think that's a risk. Again, I think the Fed, with all the liquidity injections from the Fed and the Treasury, and I'm sure you've had a lot of people that talked about the plumbing and the liquidity injections. So I'm not going to reiterate that, but that could be coming towards an end, the run here.
Which is super interesting. And we get people who have some different opinions on that liquidity too, which we'll continue to sort of go over um, as we go into the new year. So, there's one thing about sort of setting up. I feel like so many people feel it's overextended, right? And there's a setup for a pullback. Does this feel like just one of those sort of profit taking pullbacks, Tommy, and a consider consolidation, or does it feel like what we went through a lot in 23, which was sort of, mean reverting all the way back? We'd have these run-ups on expectations of things changing in a Fed pivot, and then we'd have a reversal in rates and a, really harsh pullback again. And we keep saying every day, I say this, and it's true that it was sort of rocking one side of the boat to the other. Does it feel like it could be something like that? Or does this just feel like, I don't want to say a healthy consolidation, but the kind of pullback you'd expect to see?
I will say with certainty, I don't know. And
Mhm.
the reason I say that is it's one day. And, look, the Bulls have had a great year. And one of the things that's really been interesting in the last 5 days, and I'm looking on one of my screens up there, is the Goldman Sachs most shorted basket was up 15% in the last 5 days, and the S&P was up about 2% in the
Mm.
last 5 days. It's actually 11% and 1.2% now because of today's action. But you've squeezed a lot of shorts out of the market, and the shorts have been very correlated with the Russell indices. So a
Mhm.
lot of people are like, "Oh, it's going to broaden out." Here's one of the problems that I have is it did broaden out, and we have DeMarc sell signals in the equal weight indices, both the S&P, RSP, and the Nasdaq 100, which is the QQQE. Those have DeMarc sell signals. So we have them just basically everywhere, as well as the NASDAQ and the S&P, as I mentioned, is closed. The Dow has one as well. That's the CNBC index. I think we'll see a lot of Dow points on the downside. For those that know and laugh at that, that's how I see it. Um, so I don't know. Follow through is always important.
Mhm.
This could be a one hit wonder. There was a big put action put buy with the S&P that hit the market down. I don't know. It's going to take some time, but when you do have that type of short squeeze, you lose the natural buyer. So when you do have, let's just say, some downside, there could be a vacuum a little bit lower because the natural buyer, when things go down, are the shorts. So if you have fewer shorts, you can go lower. So that's possibly what we saw today. Look, again, I've been so humbled by this market this year that I take each day one day at a time, and if it goes lower, I'm positioned for that, and we'll see. I look again. I think it's very similar to what we saw at the end of 2021, and I think the Fed has still work to do. And I mean, I was Austin Goolsbee spoke and pushed back on some of
Mhm.
what Powell said, and he's the biggest dove there is. And he was flummoxed. I mean, if I'm saying that correctly, by the market's reaction to this. And I just want to
Yes.
say, I don't get it. And I think the Fed, uh, yeah, okay, they're going to pivot. I've been thinking higher for longer. They're going to, keep rates higher. And I still think that. But if the markets go down, I've said this the last time I said it. The Fed's going to cut rates if the markets go down significantly. If there's a liquidity event or if there's some sort of geo macro war, terrorism, or something like that, that's how the Fed will pivot. and cut rates. Talking about it is one thing, doing it is another. And usually, when the Fed cuts rates, it's a cycle, and markets, equity markets, bond markets do well, but equity markets don't do so well. It's because earnings start to go down. There are other problems that
There are
happen.
bad things happening. If they're
Yeah, and
on an easing cycle, it's because there are bad things happening.
that is true. And we really haven't seen anything bad. The economy still shows everything looking great. Everybody's on the soft landing, boat. And if you go back in history, you'll look back and I mean, I'll tweet out, I have some snippets of every time the economists say a soft landing is ahead, from the 70s to the 80s to the, Bernanke and his crew, soft landings ahead. It turned into a hard landing. And I've seen people say, well, it's going to be like 1994, 95. Well, maybe, but I doubt it because there's a whole different thing happening. And back then, the Fed pivoted, and you also had Windows 95, and everybody logged onto the internet. And the
Mm.
internet was the greatest technology innovation in our lifetime. It was bigger and will be bigger than AI. AI is cool, but I don't see, my mom or your mom logging on saying, I'm going to chat GBT to figure out something. It's not going to happen. It's going to be great for so many people, but it's not going to be the internet.
Mm.
So I don't think we're going to have the tailwind like we had then that really took us out of the recession, actually gave us a soft landing and made Greenspan look like a genius. I just don't see that. I think it's going to be a hard landing. And when it happens, and I don't know when it's going to happen, well, it'll be soft and then it gets harder. And that's the problem. I don't mean to, I mean, that sounded kind of odd,
Yeah.
but
No.
it generally happens that way. And I can't see the Fed saying, oh, yeah, we got this and the unemployment rate is at
Mm.
3.7%. We've had a market that's gone up on bad news. Oh, wow, bad news, and buy stocks because the Fed's going to pivot. Now we know what the Fed has said. They're going to cut rates probably in 2024. So is bad news now going to be perceived as bad and stocks go down on that? I mean, are people going to freak out when the unemployment rate goes up above 4%, 4.5%, maybe 5%? I think people then will start to hit the panic button and say, uh-oh, this could be a little bit worse. So everybody's cool with the soft landing right now. The markets are higher. It looks all okay, but I think things are going to happen.
Yeah, it's so interesting because I think you brought up two really, really important points, and these will be points that people differ on and they debate, and we're going to have to wait and see. But I think this is sort of where the battle lines are going to be drawn, and that is one whether this idea. I think what really the reason everyone really took off after Powell spoke is because you're right. The Fed always is forced to ease because things are going bad, whether they know it and we don't know it or we all know it. That's usually the way it goes. Powell introduced this idea of preemptively easing to soft land. Like we're not gonna wait until we see the eyes of disaster. We're gonna kind of start to. I think that's what sort of lit the fire under everyone because that would be different, right? If that's the case, if they're trying to fine tune to that level. I mean, that means you think they can do it, which is a completely different conversation. But you just said something really important that this AI is not the internet. There are people who think it is, and that seems to be under one of the things underpinning this idea that we may have these gains in productivity that will allow for us to escape that sort of historical. So I think that's going to be really interesting because we just don't know, right? This is brand new. We just don't know. So
Yeah,
that's
it's
going to be really critical.
deflationary, and
Yeah.
the internet was inflationary, and you had tons of jobs created because of the internet and businesses because of the internet. And that's how I see it. I think that there'll be jobs eliminated because of the AI functionality, and that's technology. That's always what's happened with technology. Jobs are eliminated. We have iPhones, and it's eliminated 15 different things that you used to have to carry around: cameras, computer, laptops, everything, phones. It's just all in one now. So that's how I see that. Um, yeah, I listen. I'm not negative on everything. I know everybody's like, oh my god, I just want to turn this off and blow my brains out. But I do think that like energy is starting to line up as long ideas again. I started buying energy stocks, the drillers and the typical ETFs that you'd buy. Started buying those. My favorite place, actually, my favorite stock for next year is Alibaba, and I think China could
Mm.
see a bounce. I look, Alibaba trades at 8 times earnings, and it reminds me of Meta a year ago when Meta was, Jim Cramer was crying on TV that he got it wrong and it was under $100 and now it's 350. That was trading at 9 times earnings. And I think Alibaba at 8 times earnings, it has 10 times the revenues today of when it went on its IPO, and it's below its IPO price. And I know they're trying to do restructuring, and I know that it's been
Isn't that
absolutely
political
killed.
risk? Isn't that because of the political risk?
Yeah, but I think that a lot of that is pretty much priced into it.
Mm.
And you probably have some tax loss selling going into the end of the year, and they can't get, Ant Financial to go public and certain things like that. But I think people will come back into it and look at it from a value point of view. And if something possibly goes right with it, I think the stock would be over $100. And possibly, I'm just going to throw this out there, maybe it'll double this year. It's
Wow.
70-ish dollars. It just had a dividend come out today, the ex dividend. And I like FXI. And I haven't liked these. I've been really sort of negative on these for a
What's
while.
FXI?
FXI is, it was like 23 today. I think I just can't see it on my screen. It's covered up by something. But that went ex dividend today, and it paid. It's paying a really pretty good dividend as well. So
So
I'm
is
cool
this
buying these here.
the iShares China large cap ETF?
Yeah, yeah. And I'm not necessarily pro China or anything like that. I just think that these are mispriced, and I think they can work higher. And that's basically it.
Yeah. Uh, Interesting. I just want to flag, I'm always trying to sort of, I know we're all time crunched and we don't get a chance to watch everything on the platform. We've had a couple different people comment that they think that the stimulus coming from China, are getting that wrong. They think they're stimulating more than people think, and that could be a little bit of a different story. Geo Chen was one of them. Brian, maybe you remember the other one, but we just had this conversation that's been dripping out, Tommy, as a sort of under, maybe something the markets got wrong. So that's interesting that you like China as well. I know there are a couple other stocks you're looking at. Want to ask you about steel because the last time you were on, you're focused on M&A, which is interesting.
Yeah,
Last time you mentioned steel, and we had big developments recently in that.
yeah. U.S. Steel. Last time I was on, I told everybody that was my largest holding in my fund. I was the first one out the door the other day when they were bought out. I sold it for over $50. I was pretty happy about that. I bought this after the initial pop. I think my average was around $31, and I was watching it in the 20s, and then the Cleveland Cliffs came out and said that they wanted to buy them for $35. I bought it. Told everybody else to buy it, and I bought more. It was maximum size, and I thought, okay, hopefully it goes for $40. It went for 55. I knew there would be antitrust with unions and everybody freaking out. So I told everybody as soon as there's an announcement, you sell it immediately. And I was very, very pleased because I sold it at 50 rather than 40. And so that was a nice little present in a year that again has been very humbling. So I was happy that succeeded, and I have other ideas that I'm also long Paramount, and that one has been a mess.
Oh gosh,
And I think that
that's the
one is going to
never-ending
merge.
fight, right? Isn't Paramount, when you've been around so long, you forget what you used to
Yeah,
know. The
it's
Redstone, right? Isn't that still
yeah,
going
it's the
on?
Redstone family, and they're
Someone's gonna
starting.
sue or something, and
Well, they're listen. I Sumner Redstone was a real character. He used to call the Bear Stearns desk, the media trader, who is a good friend of mine, every single day and say, "Who's selling my stock?"
like,
There's a lot
that
of
anyone would
stories.
do that is just hilarious, not really
Yeah,
a
and
time gone
so, but
by.
Sherry Redstone owns the 90% of the voting rights through her vehicle, National Amusements. So there could be somebody buying that. That's Larry Ellison's son, um, who might do that. I've heard other companies, like it just came out, Warner Brothers Discovery may merge. I think there's assets there that are really worth probably double.
Wow.
If
So you
you
think this stock's
some
going to
of
pop on news of a merger?
Well, we'll see. Look, it's a it's a little hairy because there's a lot of debt, and when you
Debt
look
and
at
drama.
yeah, there's debt, there's drama, there's I mean, the family. It's a family business basically.
Yeah. It's crazy.
But if
I'm sure there's a million books on this. Like the amount of people that have been embroiled in that drama over the years, by the way, is just incredible. Like it's such a saga, that whole thing.
there's a good book about this, about Viacom, Paramount, CBS, that was written by the New York Times reporter James Stewart,
Yeah.
and forgot what it
I
was,
think
but
Les
it's just
Moonves
nuts.
was like at war with her forever, right? I think that's
Well,
the
I
point.
mean, he's a whole nother
Well,
thing.
that's a kettle of fish. I just want to mention while you're talking
His
about
son used
this.
to go to school with my daughter,
Oh,
and he
really?
used to tell my daughter, if you want more, ask less. That was the whole thing. So I love that one.
Yeah. What a
And
gem.
he was on the Love Boat too. He was an actor before he was a studio executive. He was on the Love Boat.
I did not know that.
Yeah,
I
yeah.
did not know
Les
that.
Moonves. Then
You
became
youngsters out there may not
Me
know what
Too.
the Love Boat was, but hopefully TikTok has drug it up out of the depths. It's probably on some sort of compilation, as is everything on TikTok. By the way, I just want to point out, for those of you who follow Scott Galloway, Paramount. I'm not saying like I don't even know. I can't remember, but media mergers on his radar for 2024 as well. And Paramount was one of the names he talked about. I don't know what his thought was about it. So I'm not saying that he is bullish Paramount. I'm just saying that he sees Paramount involved in some of the merger activity that's going to happen in media too. So you're right on finger on
Yeah,
the
I look.
um,
The problem is it could be, they merge with Warner Brothers Discovery, and it's a 1 + 1 = 1. But I do think that they're going to have to sell assets, and if they sell assets, that will increase the share price. So that might be the way it goes. Look, you have Larry Ellison's son, David Ellison, who's a film executive that wants the studio. We'll see what happens there. You remember, Warren Buffett is the largest shareholder of Paramount. Excuse me, I'm dying here. So
I think
that's
like
something to watch.
metaphorically, physically, we all feel exactly that way, Tom. It's like the
Get me to the
longest
end of the year,
the
please.
longest year, the longest week. We have some questions coming in, and they're really good ones. But before we get to them, I just want to take a moment and thank and acknowledge the amazing community we have. This audience is so smart, so engaged, so generous about sharing knowledge with each other. I'm looking at the chat now. In addition to the really smart questions, there are people who are swapping all kinds of information about things that happen in the market today and some of the background on what Tom's talking about, which is just amazing. I mean, Raul talks all the time about the power of the network. And a great example of that is Christopher, who's just talking about options expirations from 2 o'clock today. He's in the chat daily, dropping this kind of stuff. He's a very experienced trader. We had him do an academy session a few months back. Some of you may have seen it. And it was so good that Roger wanted him to sit back down and have a one-on-one with him. We want to play you a little snippet of that conversation.
When I first arrived on Wall Street, I started trading options, over-the-counter options, with a firm called Ragnar, and Ragnar was Sperandio's firm. He'd gone from being the king of the order clerks to having his own little firm, and there they would rip your eyeballs out going in and going out. I mean, it was an over-the-counter market. It was just dreadful. But so I was trading options long before the Chicago board existed. And then the futures finally got listed in 1982. And since I was kind of known as the futures guy, the head of our firm then, Ace Greenberg, was very friendly with Leo Melamed. And Leo Melamed was the head of the Mercantile Exchange. And he was basically the father of modern futures, both currency futures and index futures. And so he said, you guys should do the first trade.
I mean, that's so amazing. It's just a tiny little snippet of his incredible story. I love the rip your eyeballs out because that's certainly what probably is exactly like. but there's so much wisdom gained for the decades of experience and having a front row to those kind of market evolutions, the creation of new products. Thank you, Christopher, for sharing it with us every day. You can see that whole interview on our platform. Just go to realvision.com. If you are not a member, you can go there and sign up. But Tommy, you are a longtime experienced trader too. And I hear it through your voice when you're talking, first of all, so honestly about being humbled by what happened, but you learn from that, right? You make adjustments. You think about how you're doing that and you always protect yourself, which is how you live to fight another day, which is why we're having these conversations about what you're focused on next.
Yeah, I mean, listen, I had a fantastic year last year. The year before was great. This year's been, I'm going to call it a flat year. Um, that's disappointing because I have very high expectations of myself, and it's okay. I don't, beat myself up over it too much. um, but you move on, and there's a new trade ahead of you, and that's kind of how you have to look at it.
That's exactly right. And you got to live to be able to put that trade on, which is something we talk about all the time in the academy, how not to blow yourself up. And we're going to focus on that again. January, I don't even know if I'm supposed to say this, but is education month. So we're going to be doing a lot on that. Lena had a question. A lot of people chimed in on what a good question it was. Why did Tom's DeMark signals work so well in 2022, to your point, with up over 50% and not necessarily this year?
It's actually pretty simple. You had 7 stocks lead the market higher and didn't skew the. I mean, everything in 2022, including the mega cap stocks, the Nasdaq, they all sort of correlated together, and you had, I think, 4 or 5 really good buying opportunities, and market sentiment worked with it. So I just was able to, sell rips and buy dips, and this year it just hasn't been that easy. I admit, look, and the 7 stocks, those were just so uncorrelated with everything else. I mean, when you have the SPY up 22% and the equal weight up half that, 9%, it's there's a big spread in between there. So yeah, it's just I didn't get the rhythm. I didn't get the pullbacks, and normally you get 3 or 4 really pretty good pullbacks that just didn't come, and they were just very shallow with some of those large cap names. And I moved forward. It did a similar thing in 2021, not as extreme. But look, if you go back and you look at the 2023 leaders, they're up 103% this year, equal weight. I'm just looking at my screen here, and they were down 48% last year. So if you go year over year, they're not up that much, but that's equal weight. So it's one way of looking at it. But yeah, I'm the first one to admit it, and I don't chase stocks. That's just not my strategy.
Yeah, well, again, because you have a strategy, which is really important. Otherwise,
Yeah,
you're just
I look for
chasing, and
things
this
that
is
are
how people
low,
get into
and like
trouble.
I've been buying energy. In June, remember, nobody liked energy. In the middle of June, I was on and I was saying I was starting to buy energy, and I rode that into the August or September, and took a 20% gain and said thanks. And I look for ideas like that, and you can't fit everything you do into every market, and that's the way I look at things. And you have strengths. I know my strengths, and this was a year that just didn't mesh with my strengths, and I think 2024 will.
Yeah. And that's another thing, know what kind of trader you are, because that gives you incredible insight, which is another part of the module we do in the academy. AJ asking, so would a hard landing scenario be a great buying opportunity? The broadness of that makes me nervous, but how are you? Because you do think there's going to be a hard landing right now, right, Tom? So does that look like a buying opportunity? I'm sure you have to be a little bit more strategic than that, but
Well, there's a few things. If we do have a hard landing, we're probably going to have a year like we had last year, where we had these moves down, and then you had bounces, and then that happened, and you go back into any larger correction period and usually have between 5 and 10 moves down, bounce, move down, bounce. And that's generally my strength. So yeah, when we get to that hard landing bottom, you're not going to see people that are going to be interested in buying stocks. And that was one thing that really sort of threw me off in October is we really just had way too many people after a market was pulling back that were just over eager to buy stocks. And so at the bottoms, the true bottoms, nobody wants to buy stocks. I've been there, and I've been very lonely as a buyer at those periods.
Yeah, that takes a lot of fortitude. Tommy, amazing conversation as always. We just love catching up with you. We love the fact that you're thinking outside the box and that you're always honest with yourself and everybody who's listening. Just fantastic. A lot of experience and wisdom behind that. So thank you so much.
Well, thank you, and happy holidays and Merry Christmas and Happy New Year to everyone at Real Vision and all the viewers. Thank you so much. We'll see you in 2024.
Absolutely. We can't wait to catch up with you on that side. Thanks, everybody. We will continue tomorrow. If I don't see you, because this is my last one, have a wonderful, wonderful holiday. We have a lot of amazing stuff lined up for you. Even though I won't be here, we won't be here for part of it. We have a lot of great content. So you're going to want to check it out and take the time to catch up on some of this awesome interviews that are on the platform. Thanks, everybody. Take care. Good luck out there. Join over 5,000 attendees for the largest AI event in Asia, Super AI in Singapore, June 5th and 6th, 2024. Edward Snowden, Benedict Evans, Balaji Srinivasan, and over 150 others will hit the stage, joining the industry's most influential to explore and unveil the next wave of transformative AI technologies. Singapore will become a vibrant AI hub for a full week, from June 3rd to the 9th, with over 150 side events that will make for unparalleled networking opportunities. Visit superai.com for 20% off tickets with the code REALVISION. Look for the link in the description.